Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is July 16, 2018, and I thought I'd take a look at soybeans here today because there was a bit of a bounce here, the ETF being SOYB. Now, anybody that's been trading, we know that on the daily bar basis that everything has been pointed to the downside with the trends, but we have a technical rating which is pointed to the opposite side, to the plus side. And so whenever you get a conflict between specifically all three of the trends pointed down and a nice little pop here to the upside with the technical rating, it generally means that there's something taking place and you should really do some additional investigation. So what I'm going to do is I'm going to take a look at, in this case, our weekly deep dive pro alerts. Come down to soybeans and you'll see that a surge low triggered today. And a surge low is by definition a profit taking. You can see up here a profit taking type tool, but I think that the crescendo is there. So I'm going to focus a little bit on soybeans on weekly bars because that's where I think a lot of the emphasis is coming from. So each of these bars are weekly bars for soybeans, and you can see a number of things that are taking place here. First, you've got the elastic level. You can see that it's been attempting to put in some type of a base. The market's been selling off, bounce. Sells off more, a bounce. A sell off again, another bounce. Usually you get three of these, you get some type of reversal. Normally they would reverse right away, or at least tell us that conditions are ripe for turnaround. When you get three of these in a row, then maybe you should be heeding the warning, especially when it works in conjunction with some of our other types of tools. In this case, a sub. Let me see if I can pull this up here. A sub low in our power trend or power level type tool that has triggered as well. Now, this bar is still forming, so they can see that there's a nice little bounce to the upside. And today being Monday, a lot of things can happen before the end of the week. So this is working off just today's data, but it usually is a precursor for the market to have at least a base and potentially a little bit of a further bounce to the market. If we take a look at, in this case, soybeans on weekly bars, you can see that this is where that surge low occurred. We had another one earlier. The market did base a little bit and then it sold off again. We might very well be getting that reversal type condition. So if we take a look at the website, I just want to show this to you. Here is the surge low, that indicator I was just talking about. You can see soybeans here at the top of the list, or at the top end of the list, I should say. And you can see that under the analyses of all of the surge lows that we have, you can see that it actually does pretty well in its performance with an average wins to average loss of 3. They're all good. Anything above 1, with maybe the exception of yen, they're all quite good. But you can see that soybeans is actually extraordinarily good. So you should really heed the warning with this particular indicator. Here's the elastic level. This is as of Friday, so it doesn't include today's action. You can see that soybeans were oversold on a daily bar basis, and so this reversal is looming both on a weekly as well as a daily bar basis. So what does this mean for our systems? Well, what we're looking at with today's action, we had two systems that went long. We had been short, daily bar system and a weekly bar system. So they're going to take a little while to adjust to the market and be able to reverse positions. That's a weakness to daily and weekly bar systems. The advantage that we offer, at least the way that I go about doing things, is the ability to have multiple systems trading different trading styles in different time frames. So today being the 16th, we had two systems that went long, an Arcturus long 120-minute bar system, and we had one down here, a Rigel 90-minute bar system. So these are obviously intraday systems. They're reacting to what the market is giving to them. Now they both have losses because they got in later in the day, but what it's setting us up for is obviously a hedge here. We got two that are short, we got two that are long, and so what we are is protected. So as this market is basing, while we're waiting for the daily in the weekly system to either confirm that they're going to reverse to the upside and liquidate themselves, or the market's going to continue to slide here. I'm not sure which way it's going to be going because I'm not trying to forecast the market, but the systems are looking at this condition that we're under right now and saying, I'm going to protect, I'm going to hedge, I don't care what's taking place, and what they're going to do is if the market is able to rally, then we're going to be able to hedge, obviously, and protect these two shorts. Maybe some other of the long systems might trigger as well. If the market bases and sells off a little bit further, maybe those systems liquidate, maybe they don't, but at least as of right now, a snapshot in time, we have a nice little hedge going on there. So with all those conditions that are occurring on weekly bars, the oversold condition on weekly bars, oversold condition on daily bars, that sub low that we are looking at on the one chart, we have the surge low that triggered as well. There's a lot of conditions that are pointing to the crescendo effect that has taken place here, and what we're going to be looking for is obviously a protection mode right now, and then the opportunity to unwind, assuming the market heads higher, the daily and the weekly system, and hopefully we start to get more and more of these long systems starting to trigger so we can take advantage of any bounce that it should occur. But in general terms, I think there's going to be a consolidation that theoretically should start to happen here. So I don't expect it to be a market that goes straight up from here, but I do believe that it warrants protecting your shorts and looking for opportunities to start to go long the market. So let's see how things kind of play out here, and we will start to look at some more markets later tomorrow. Thanks so much. Bye-bye.